Hello everyone, welcome back to our channel Part-Time IT Investor. So today is Sunday and over the weekend I think the war with respect to Iran and US has moved into the worst situation. Okay, and that got me thinking that how would I know that how much my portfolio will fall if Nifty crashes. Okay, so that's what I was working over the weekend, guys. Okay, I utilized my weekend time to develop a tool, okay, which is a free AI tool, okay, and the AI will be evaluating our portfolio and will be giving us a brutal evaluation that how much our portfolio will fall if Nifty crashes. Okay, so without taking much of the time, okay, let's quickly start with our today's video. I hope that will be helpful for you. And yes, of course, this tool is free for all of my subscriber. Okay, please make use of it and please evaluate your portfolio and whatever analysis which you are getting from that tool, please do discuss with your financial advisor. Okay, so let's move ahead. So critical factor over the weekend, which is impacting and can have the high possibility of Nifty getting crashed, okay, is oil prices, okay, and falling rupee. So rupee, I think it crossed 93 rupees per dollar, and Brent crude was trading around $110 over the weekend. And this is not good, guys. Every $10 increase in crude oil will be impacting our fiscal deficit by $17 billion. Okay, billion, $17 billion. Okay, and over and above that, falling rupee will also put up a pressure. Okay, so it's not good for economy, and all the analysis or the host which are hosting the financial talks, okay, they're pointing towards market going to 18,000 or 20,000. Okay, that kept me on my toes. Okay, to understand that I need to know a way to understand how much my portfolio will fall if Nifty touches 20,000 or 18,000. Okay, and that's how I did some research and understood that we have a factor called beta. Okay, I will quickly cover on that how I use that factor to create a tool. Okay, so before we move ahead, let's quickly go through the closing market. So as we can see that here, Dow Jones closed almost 1% negative. Then gold was also negative. Brent crude oil was almost around 106 dollar. Then crude oil WTI is 98. Gift Nifty, I think it hold 20,000, but on Friday before end of the day, I saw that it's breaking around 22,800. USD INR, I think, oh my God, it's 93.7 almost. Okay, it's not good, not good, guys. As we discussed on Friday, falling rupee will definitely have a positive impact upon IT and pharma. Okay, that will be a bet, but we don't know the impact on our other stock portfolio. And over and above that, ICICI Bank ADR and HDFC Bank ADR is also fallen by almost 3%. Okay, so overall Bank Nifty, we can see a huge gap down as well. All right, so let's go ahead and quickly start with our tool. Okay, so the tool which I have created is based upon the beta calculation. Okay, so if you ask me beta, what is beta? In a layman's term, okay, it's a factor which will tell us that how volatile is your stock as against the market. For example, if Nifty is falling by 1% and if beta is around 1.5, so this means that my stock will fall by 1.5% if Nifty falls by 1%. It is as simple as that in layman's term, but calculation is not that simple. I need to go through multiple iteration and late night coding to do so. So that will give us the insight that how much our portfolio will crack. Okay. So moving ahead. So generally you might have seen in multiple videos. Okay. In order to protect your portfolio, you need to buy a hedge. Okay. And by buying hedge means buy put. So it will be a leap option or it can be 2 months away put which people are buying, but they don't know how many puts to buy. Okay, and how it will impact their portfolio. Okay, and it is acting as an insurance. Okay, It's acting as insurance against the portfolio, which I'm not fan of it. Okay, I'm a income kind of guy, so I will. That's why you might have seen on Friday I have created a double candle spread. Okay, so even though market opens gap down, I will be having some income. So I'm okay if my full portfolio is not covered, but at least some percentage. For example, if market fail by 5%, so put will of course cover almost 5% based upon which put option I'm buying, okay, or delta which I'm choosing. But based upon income strategy, I might not be able to cover whole 5%. Maybe I will get back 3%. So I'm okay to lose 2%, but I don't want it to lose the insurance money, which is if I buy the put. Okay, so that's why I come up with different income strategy. Okay, but today we will discuss upon the basic part only. Okay, so without wasting time, let's quickly go ahead and check our tool. Okay, so guys, I will take a pause over here. If you are new to our channel, so this is our channel, please don't forget to like, subscribe, and comment. Okay, and in order to get a access to our free tool. Okay, so this is the video which we discussed on Friday, where I mentioned my double candles strategy. Please take a look if you're new to it, and try to also get some knowledge how I'm designing the strategy. Okay, so I will quickly start with the tool. Okay, so tool which I have developed, guys. Okay, it's a web-based tool, so you can access it via मोबाइल एज वेल एज वाया लैपटॉप. जो टूल मैंने बनाया गाइस, ये आप लैपटॉप पे भी ओपन कर सकते हैं और मोबाइल पे भी ओपन कर सकते हैं. ओके, जैसे आपने ये टूल ओपन करोगे, ओके, द मोमेंट यू विल ओपन दिस टूल, ओके, you will find our logo, okay, our channel logo, and then portfolio beta and option hedge calculator. Okay, you will also find a subscribe part over here. If you're new to our channel, you can click on this link. This will take away to our channel page, and you can subscribe to our channel if you're liking our content. Okay, so pardon me. So I will take a bit of more time over here, guys, okay, to explain you the usage of tool, how to use it. Okay, so first let's start with the symbol. Okay, so I'm using Nifty option as an hedge tool. Okay, and the current Nifty index lot is around 65, that I'm changing it over here. Okay, and target delta will be 0.5. Okay, so 0.5 put delta is almost equal to our ATM call. Okay, at the mini call which is there. Okay, I think let's start. So target put delta will be zero point 0.5. So zero point 0.5 delta is almost around ATM. Okay, so many suggest ATM call, many suggest out of the money call as well. So if let's say if you wanted to further go down, okay, for example, market is trading at around 23,000. Okay, and we wanted to buy a put if it reaches around 22,000. Okay, so you can go to the sensible, and let's say you can choose next month expiry and see what is the option, okay, which is around 22,000. So let's say 22,000 will be trading around delta of around, let's say, 0.30. Okay, so in that number we need to pick it over here. So based upon your analysis, if you think market will fall to around 22,000, okay, then you need to go to the sensible, you need to open the open interest for the next month and check what is the delta for 22,000 and to enter it over here. Okay, so far so good. Now here, okay, if you see, I have put up some of the disclaimer over here, like calculate your exact portfolio risk and find out how many put option you need to hedge against a market crash. Okay, so what I have done over here, I have populated all the Nifty 50 stocks over here. Okay, and you can put the quantity which you have in a portfolio and the average price at which you have bought it. Okay, if you wanted to add any other stock which is not a part of Nifty 50, you can simply put it plus over here and you can enter the stock. Okay, for example, okay, let's take one example. Let's say I'm having Adani port. Okay, so Adani port is around, I'm having, let's say 100, and let's say my purchase price was around 900. Okay, and then say Apollo Hospital, let's say I'm having 100 stocks of it, and my purchase price is around 6,000. Currently it's running at around 7,000 or 8,000, something like that. Okay, so let's say I selected this. Okay, and then if I click upon the calculate hedge from grid, it will showcase analysis complete, and you can see over here, guys. Okay, this is what I wanted to show you. So what it shows, that if Nifty falls by 1%, okay, my portfolio of two stocks, okay, will fall by 0.84%. Okay, it will fall by 0.84%. So basically it's 1 to 1, almost 1 to 1 ratio. Okay, मतलब 1% मेरा निफ्टी गिरेगा तो ऑलमोस्ट 0.8% मेरा पोर्टफोलियो गिरेगा, और मेरे पोर्टफोलियो में कितने स्टॉक्स है? आई एम हैविंग ओनली टू स्टॉक्स, which is Adani Port and Apollo Hospital. Okay, so if we go further ahead, okay, so it will show you this calculation. Okay, uh, no, oh my bad. So yeah, it will show you this. Okay, let me again. So Adani port was 100, and this was around how would I say 900, let's say, and this was again 100, and this was, let's say, again 6,000. Okay, so let me go ahead and calculate the hedge. Okay, yes, this was there, and then you can see it will show you the stock which you have in portfolio. So my average buy price, okay, current LTP is 1,365, then LT, and then for Apollo Hospital is 7,364. Then I'm sitting on profit of around 46,540 and 1,36,000. And you can see the individual stock beta as well over here. Okay, so if I wanted to highlight it over here, okay, so you can see, so 1.42. So for Adani Port, what does that mean? अगर अदानी पोर्ट 1%, अगर निफ्टी 1% गिरता है तो अदानी पोर्ट का स्टॉक मेरा 1.5% गिरेगा. ओके, देन सेकंड स्टॉक इज अपोलो हॉस्पिटल. सो इफ मार्केट फॉल्स बाय 1%, अपोलो हॉस्पिटल will fall by 0.7%. Okay, so that's how it is calculating beta. But while calculating the beta for whole portfolio, we need to do an weighted average. Okay, so I will not go into much of the details. Okay, yeah, I will not go into much of the details of the formula. Okay, so let's quickly jump to the final calculation report. So you can see that total investment which is calculated is around 6,90,000. Live portfolio is 8,72,000. 1,82,000 is a profit. Okay, and weighted, okay, so weighted portfolio beta is around 0.84. Okay, and we can see that beta weighted risk exposure is 7,29,000. Okay, and it is showing that current index price is 20,114. So what it says now, okay, how many put, okay, you need to buy in order to hedge it. Okay, so that's what we did. So here if you see, we had taken the target put of 0.20 because that will come around 22,000. So I need to buy 3 lot of put. Okay, 3 lot of put if I wanted to hedge my portfolio. Let's say I wanted to go 1:1. Okay, for example 0.5 beta, and if I calculate it, okay, then you will see that put required will get reduced. See, now exact put required is only 1 lot, but since I'm targeting 22,000, okay, so 0.5, okay, let me write it over here. 0.5 delta is around ATM at the money. Okay, that's why only 1 lot is required for hedging the portfolio. But yes, it's insurance. So by the end of the month, let's say it doesn't fall, then you will be at loss. So this is the insurance which you are paying to maintain the portfolio, okay, or to hedge against the black swan event. So let's say I'm targeting 0.2. Okay, so that is around 22,000. So how I have reached to this point of 22,000, you can go ahead into Sensible and check that for 22,000 put option, okay, for the month of April or May, okay, how much is the uh, beta delta for it. So generally, if I want to do it, I will take it for the May month, and if I will wait for the April month. So I will not be losing the complete insurance or complete option premium, maybe 20 or 30% if market don't fall or market remain range bound. Okay. Yes, if market reverses, it become bullish, then yes, we will be losing all of our insurance premium, which is put premium. Okay, so far so good. All right. So guys, I will request everyone, if you are having an issue, please write it down in the comment section, or you can email me so that I can answer your queries. Okay. So let's move to the fastest method to calculate it. Like I'm using Zerodha, guys. Okay. So I'm a loyal customer of Zerodha. So that's why I have created interface which will take the Zerodha file. So what you can do, you can download the Zerodha holding file, okay, from your holding option. So you can go to the Zerodha, go to the holding, and there you will see .csv or Excel file, okay, which you can download it. That will give you the portfolio details, okay. So what I've done over here, I have written a script which is filtering out all the unnecessary details like your IDs and other things. Okay, and it will directly fetch it from your portfolio. So instead of putting it manually, it will directly screen it from here. So what I did, guys, I uploaded the file from one of my account, okay, which is a holding. So guys, don't be phased out with the holding accounts, okay, and it's one of my account. So let's go ahead and quickly calculate it, okay. So it's updated, and let's say calculate the hedge from file, okay. So you can see my portfolio, okay, which is in one of my trading account. It says that it's well hedged, okay, 0.95%, okay. And one critical thing which I forgot to mention, okay, is our AI analysis, okay. So I have included the Gemini based calculation engine, okay, which will give give his recommendation or thoughts, okay, of my portfolio. Okay, so let's quickly check that. Okay, so it is still scanning. Okay, it's done. So as you can see, what Gemini AI thinks, okay, your portfolio is perfectly synced. Excuse me, guys. Okay, your portfolio is perfectly synced with Nifty 50. You are capturing the broad market move efficiently. Okay, so it's saying that my portfolio is neutral. Okay, because every 1% fall in Nifty will also impact my portfolio by another 1%. Okay, so this is my portfolio stock, guys, and you can see one of my stock is government bond over here. Okay, so government bond will be having zero beta because it's not having any impact. Okay, then I'm having CAMS. CAMS is a high beta stock, guys. Okay, CAMS, and then second CDSL, and that's why almost a couple of months ago when Nifty crossed 50 MA, I booked some profit in CAMS as well as CDSL. Okay, that's my way of trading and booking the profit. Okay, and then you can see I also have Dr. Reddy's lab. It is around 0.78%. Okay, one thing which I want to focus is gold bees, guys. Okay, you can see gold bees. So gold bees, you can see its beta is 0.20. Okay, so low beta. So in many of my video, like investing, having passive income by investing, in that I have mentioned that gold bees, government bonds are a good hedge. Okay, and it will also give us a steady income. The next one which I want to highlight is Mindspace. It's a real estate investment trust. As you can see, I have some investment over there as well. So what I did, basically, I did some profit booking and moved that money to the Mindspace. Okay, so for that also we are having a beta as zero because we'll be getting continuously dividend yield from that. Okay, so this is my calculations. Okay, so my total investment is around 5,74,000, and my current profit is around 1,57,000. Okay, so that comes to around, I think, 15%, roughly 15% of profit. Okay, and XRI, let me quickly check in my Zerodha app what is the XIRR of my portfolio. Okay, since we are discussing the same. So it's showing around 26.87% profit, absolute profit. Okay. And if I go to the XIRR calculation of my portfolio, okay, so it's giving me around 12.59%. Okay, so I'm pretty much good. Okay, as you can see that gold, real estate, investment trust, and then some of other stock, they saved my portfolio. Okay, now I don't want to take any risk. That's why I am creating this tool to understand how it will impact if Nifty crashes. Okay, so you can see it is recommending me that if even if I bought one put which is at the money, okay, then I should be able to hedge my portfolio. But the drawback for this is that if I buy put off at the money, okay, let's say for May month, and let's say in April month, market is bullish, okay, by a certain extent, then I will start losing the premium. Okay, so I don't want it to lose the insurance money. That's why I have some other strategy as well. So those are some advanced strategy, guys, which I will be mentioning over here, as you can see. So I have created some advanced strategy which I will be completing by tomorrow end of the day, or maybe day after tomorrow, since weekend is done. So I think I need to spend some time, okay, which I will try to cover in our next video. Okay, but currently it is locked. Okay, so if you are a subscriber, I will share the passcode for this in my next video, which is part 2. Okay, and you can enter that passcode over here to access my advanced strategies over here. Okay, it's completely free tool, guys, nothing more, nothing less. Okay, it's just that you need to go through the video for the advanced strategy, which I will be explaining maybe in a couple of days. Okay, so I hope this video is helpful for you, and please do play around with this tool. Please do make use of Gemini APIs, which we have used over here. Okay, and based upon the output of this tool, you can discuss this with your financial advisor. Okay, so I hope this will be very helpful, guys. So I think that's it from my side. Thank you very much. See you on the Monday. Let's see how market behaves. Okay, good night for now. Bye bye.